Welcome back. Is Cardano facing the critical support levels, and will we see a major breakout in the ADA cryptocurrency? We're going to be discussing that in today's video, along with the United States removing the Bitcoin cap. And we're going to be starting right here with a major vote failing in the Solana ecosystem amidst a major price crash in the overall valuation of the crypto. Now, we have been covering Solana very extensively more recently, and especially talking about kind of the downtrend in Solana. It's very interesting because, as you guys know, I have never invested or held Solana since it launched, right? I used to call it made by and for the billionaires, right? That's FTX created this coin for. And so, over this previous bear market in 2023, 2024, kind of seeing the price movements increasing substantially, having better price movement than any other cryptocurrency in the market, going from $8 to $260. I was like, oh, everybody's speculating on the technology they're going to be releasing. Well, they did release technology, and that was called meme coins, and that was quite the epic failure. And so we have been seeing a major drawdown in the price since the meme coin slowdown. Well, there's been a lot of kind of contention in the ecosystem of Solana to upgrade the protocol. And some are claiming it's going to centralize the protocol, at least some of the upgrades that have been proposed. And that brings us to today's story. And don't forget to give this video a free thumbs up. Also hit that subscribe button if you want to help support the channel. Click the join button down below to learn more about becoming a channel member, or you can use the super chats in the comments below. Now, Solana has, been basically talking about this Solana improvement proposal, basically called SIMD 0228, and that would reform Solana's inflation levels. And just in the last couple of days from when I'm recording this video, they had the vote on chain. And while there was a lot of support for the vote, and we're going to be getting into the specifics of that in just a minute, ultimately this proposal failed, and the inflation, or as some call it, high inflation, will remain status quo for now. And so I'm going to walk you through the actual vote. I'm going to walk you through what the inflation looks like, and we're going to look at it all on chain. So a contentious effort to reform the blockchain network generous inflation regime flopped after supporters of this proposal failed to garner the supermajority they need to implement the major economic change. Now, I believe supermajority is over 50%, but it may actually be over 60% based on whatever the protocol rules are. The surprise result delivered a blow to the Solana power brokers who rallied to replace Solana's static inflation mechanism with a market-based system, right? Going from just kind of a fixed, this is what we're going to inflate, to based on what the market is and what the market is doing. Their proposal likely would have cut the network's inflation 4.7% annual staking rewards down to 1%. So on one end, the inflation rate would be slowing down, which if you're a holder of the coin, we know this from the dollar, right? The more they inflate, the more value you lose in the underlying asset. Now with the dollar, because there's so many dollars out there, when they print it, you don't necessarily feel it. But we did feel it over when they printed $4 trillion during the pandemic, and then we had the inflation about a year and a half later, right? We did feel it then. So it can occur, and this is what we see in these cryptocurrencies when the price goes higher or lower. Sometimes it goes lower just based on the inflation mechanism, because if you're inflating and putting more coins into the circulating supply, that would effectively bring the price down. Because remember, these coins, the market cap is what is based on the circulating supply, not the maximum supply. So it doesn't matter how many coins are going to be at fully mint or fully released. It doesn't matter what that number is. It matters what the number is now and what the number is going to be. And we used to talk a lot about this with Cardano, because the Cardano ecosystem, and we are going to be talking about the price in a little bit with Cardano, and we will talk about the inflation mechanism there as well, because that could potentially be affecting whether Cardano is able to break out of these support levels or not. And so we used to talk about Cardano's inflation a lot. I used to tell my viewers, 1 billion coins a year is what Cardano was inflating in 2020, 2021, 2022. And a lot of the people in the ecosystem were like, no, Cryptoviser, we're not inflating that much. It's not that bad. And it's like, no, it is that bad. That's a lot of coins to be inflating. Now, granted, those coins were going to stakers, but are stakers actually growing the network, or are they just extracting value from the network? Well, if stakers are just sitting and keeping their coins in a staking pool and not actually participating in transacting or payments or DeFi or anything else, it's kind of dead weight. And this is the big difference between previous cycles and this cycle. This cycle is different, guys. And every cycle going forward is going to continue to be different, because right now they're talking about inflation and the circulating supply or the maximum supply, how many coins are going to staking. There is going to be a day, right? I think Cardano, the actual circulating supply, if you continue to go at 1 billion coins per year, where it's like 2030, the money runs out. And so then the network, and Charles has talked about this before, specifically with Cardano. He has said that eventually the fees of the network will pay the validators and the stakers, right? Right. And the mechanism is going to change over the course of time, because, if you look at like Ethereum, where do Ethereum rewards come from? They come from transactions and transaction fees and stuff like that. Granted, there is some inflationary mechanism there, but they also burn coins at the same time to offset that inflation. So yeah, there's big differences between these ecosystems, but a lot of similarities, and that's why this vote is so important, because it's not really about what the vote was. It's really about what the future of the network is going to be. Now, keep in mind, right? If you're a staker, you don't want the inflation rate to change, because then you're going to make less. But if you're a validator of the network, like an actual node operator, yeah, you do want the inflation rate to go down. If you're just a holder of the coin, you do want the inflation rate to go down, because otherwise this negatively impacts your holdings, right? So the total supply in Solana is 596 million coins. The circulating supply right now is about 85.5%, right? 509 million, which means there's about 14.5% not circulating or not yet released in the circulating supply, not part of the market cap. So if they were to dump all these coins into the market, for instance, this would effectively, just based on the laws of supply and demand, decrease the price of your coin by about 15%, because you would be injecting this much more coins into the network if you did that all at once. The current inflation rate, according to Solana Compass website, is 4.661%. The initial inflation rate was 8%. So you could see it's already basically dropped in half. It's showing the final inflation is going to be 1.5%. And they wanted to drop it down to 1%, apparently. And this failed. So in a contest that pitted Solana influence leaders and investors who claim the network's high staking rewards are bad for Solana's price, against small-time operators who feel the effect of a big cut to their revenue, their opposition rallied hardest this past week as late voting validator ballots broke heavily in favor of a no vote for this specific vote. So yeah, basically, Solana validators are only called upon to vote when the network is grappling with a major economic change, according to Solana Compass validator. This proposal is the third ever such vote to appear in records by staking facilities. Its controversy sparked the highest turnout vote in the network's history. Over 66% of validators cast votes, two-thirds. Together, they yielded 75% of the network's voting power, a remarkable share given voting in the decentralized system is voluntary. Of the participating validators with 500,000 Solana or less, 500,000 Solana. Let's just do the math on that to understand the numbers that we're talking about. 500,000 Solana times $133 is $66 million. That's we're talking about now people who are below this threshold. Over 60% of those voted against this proposal. Larger validators saw the exact opposite. Of those with more than 500,000 Solana, 60% voted in favor. So think about that. The validators voted in favor of reducing the inflation, but the holders, right, people with $66 million or less in Solana, they voted against it, because they're probably earning most of their passive income from their Solana in the staking mechanism. So they don't care. They're just extracting value from the ecosystem, especially during a bull market. At least that's my viewpoint on it, right? Maybe they're not actually doing that. Anyway, Tushar Jain, who is a co-founder and managing partner of Multicoin Capital, major crypto firm, said this proposal was a historic milestone for crypto. Even though our proposal was technically defeated by the vote, this was a major victory for the Solana ecosystem and governance process. Over 74% of stake turned up to vote on the proposal. Yes votes were 43.6% of the stake. No votes were 27.4%, and 3.3% abstained. So think about that. More actual votes were for yes for this proposal to be implemented. But because it's not a super majority, they were not able to get this vote passed. This is very interesting because what this says is that the validators, the network operators, who historically in most of these crypto ecosystems held all the cards, no longer, it appears, hold the cards, because now it looks, at least in the Solana ecosystem, based on this vote, that there is a spread between the actual validators of the network, right, the whales, and the actual network. The wealth distribution is more spread out. And this is very interesting to see, especially in Solana, where there are still a lot of big whales. And even though all these big whales voted, they still couldn't get a supermajority. And so with other ecosystems where, you could have a supermajority just from the founding entities, right? I mean, I would imagine in the Cardano ecosystem, you have a supermajority from the early founders and early team members and engineers. Probably within 10 people, they can basically control where the network moves just based on votes. And again, that's just my assumption on it. Bitcoin, I don't think that you could do that. Although some would argue if you took all the US companies together that own Bitcoin, they would have a supermajority vote. But anyway, moving on, he said, to put that in context, this proposal was the biggest crypto governance vote ever by both number and participants and participating market cap of any ecosystem, chain, or network. Solana's market cap during this governance debate was comparable to Bitcoin's market cap during the mid-2017 block size wars. This director at Multicoin Cap said, if this vote tells us one thing, it's that the state of Solana's network is strong. This was a meaningful scaling stress test, and the network passed despite a wide stratification of diverging opinions and interests. And then he goes on, yada, yada, yada. You guys going to get it. So this was the actual vote right here. You can see here on Dune Analytics. Let's put this in dark. There you go. So 911 validators voted, 74% of the entire staked vote voted, and you can see 43% voted for this proposal to pass. With an inflation reduction, 27.4 said no. And again, it did not pass because they didn't have a supermajority. So interesting stuff happening in the Solana ecosystem, especially just during this price downturn. But anyway, moving right along, we are now hearing that Trump could be a catalyst for global pro-crypto shift, according to the Binance CEO. Now, we covered this briefly the other day, but Binance's CEO, Richard Teng, said he expects Trump's pro-crypto legislation in the U.S. to spur regulators in other parts of the world to follow suit. Speaking on a panel alongside Teng, Hashkey Capital's CEO, Chao Deng, said that under Trump, the momentum is building, institution and retail adoption of crypto assets is immense. And I would agree, but there's still a lot of concern as to, how quickly this is actually going to occur, right? Trump administration wants to acquire as much Bitcoin as possible. A White House official told a room of crypto industry leaders this week that there should be no limit to the size of U.S. government strategic Bitcoin reserve. But they're saying this, and we know on the same side that there's no actual legislation or mechanism yet to actually acquire new Bitcoin, right? So at a closed-door roundtable hosted by the Bitcoin Policy Institute, executive director of the Presidential Working Group told participants that the White House is intent on acquiring as much Bitcoin as it can, according to multiple attendees. When asked by someone in the room exactly how much Bitcoin the U.S. government might ultimately acquire, he joked to the question was akin to asking someone how many dollars they'd want. One roundtable attendee told Decrypt. A White House official confirmed that he did indeed make these statements about acquiring as much Bitcoin as possible, but added the caveat that such acquisitions would be made in a budget-neutral way that doesn't cost taxpayers a dime. So this is interesting because they're saying cost taxpayers a dime, right? So it's not going to cost taxpayers anything technically, but if you look and maybe say out of tariffs, 1/10 of 1% of all the tariffs collected will go to purchase or acquire Bitcoin, right? 1/10 of 1% or 1/100th of 1% or whatever small number. Technically, it's not costing taxpayers a dime. But some would say that it is, because instead of that money going to other things to support America, it's going to the Bitcoin reserve, right? So I think that they're going to come up with a mechanism similar to that, or they're going to use the Treasury to issue bonds to get money from the Federal Reserve, basically borrowing money. Technically, there's no cost to the American people, especially if, similar to the MicroStrategy strategy, you the debt owed would be offset by the gains acquired. And at a global scale and over a long period of time, if you believe that Bitcoin price is going to go up, exponentially, and that the dollar's value will go lower exponentially, continue on, right? Then there's it's clear what is going to happen. This is why MicroStrategy is taking this bet, because they believe, right? Michael Saylor and the company itself believes that Bitcoin will continue to appreciate against the dollar continuing to depreciate, and fiat really all around the world as they continue to print and print and print. Even if they cut some of the debts and deficits, and they still have to print, right? It's just how much they are actually printing, how much new money they're going to be adding by borrowing. And it's either the U.S. is borrowing or another country is borrowing, but either way, Bitcoin is a fixed supply, right? And so this is MicroStrategy's strategy: buy debt that's going to devalue, and buy an asset with the money that you get from that debt that's going to appreciate in value. It's a really, really good strategy if it works. And over the long term, it will work. It's kind of like going to a casino, right? Like if you sit at the table long enough, on most games, right? Or there's a few games that you're very close to 50-50. I mean, even roulette, black or red. I mean, it's basically 50-50. Now they have the zero, the double zero, triple zero. Soon they're going to have 10 zeros on the board. And that's all to take away your odds of winning on a black or red. But if it's just one double zero, effectively you're at a 50-50 shot of hitting black or red. Now, if you're only playing two hands, your odds are 50-50. Over the longer period of time, your odds will shake out if you're losing, but you keep playing over the long term, it will work. That's why if you really look at slots, people think that if you watch some of these videos on slot machines and how they actually work, it's crazy to think that the odds are based on millions and millions of spins, and every single time that you press that button, your chances are resetting. People think that it's like, no, I'm luckier this time because I lost the last 10 pulls. It's like, no, statistically, yes, if the payout is 50-50, like 50% you're going to win, 50% you're going to lose, but that's not really what the odds are, right? Anyway, it goes into really deep statistical analysis, but that's basically how Bitcoin works. And so the White House saying they're going to acquire, it's going to really depend on how they can acquire without costing the taxpayers a dime. Right, I do think that it's more likely to be the Treasury, where the Treasury issues the bonds to the Federal Reserve. The Federal Reserve issues the money, and then they buy the Bitcoin with the money, because it's all going to be the same thing anyway. But there is also concern that Trump's crypto task force should work with as much enthusiasm as DOGE, the Department of Government Efficiency. And so this is an opinion piece by the chief tech officer at Komodo Platform, and effectively, he said the Crypto Task Force held a press conference in early February. It struck the wrong tone. While the task force gave lip service to regulatory clarity, the goals seemed to placate the crypto industry, not bring about change that empowers individuals. Okay, I mean, he said instead of perpetuating the same discussion on regulatory clarity that the industry has been having with officials for years, the task force should take a similar approach to crypto matters as the Department of Government Efficiency, which has been working in feverish haste to cut federal agencies and programs that it deemed wasteful. Now, I do think that they are moving fairly quick, especially like we see the SEC rapidly adjusting their policy and procedures and actions that they've taken. But I would agree, right? I think David Sachs is a very smart guy. I just don't know that he has the opportunity when he's in that room and Trump is signing those executive orders on crypto and AI for that matter. to really make a stand and say like we are changing this. This is exciting for America. But instead, it's kind of like, okay, you're signing this because you made the promise. It was kind of like very transactional instead of like being inspirational to the people. And I think that that would send a different message, right? Like, no, 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 no. Like, this is changing. We are going to be a pro crypto, pro blockchain country. We're going to bring in the industry, the developers, the infrastructure providers, right? Because remember, Bitcoin mining companies also can benefit AI, which also benefits the United States. And it also benefits the energy industry and local jobs and all of that. So there's a lot more to it than just crypto. But at the end of the day, it comes down to like, are we changing the viewpoint of crypto in the US or are we not? Right? Because right now all they see is Doge is cutting everything. But like they should also see like we're doing this for the betterment of the US, right? Like it should be part of people's investment portfolios. Bottom line. Like forget about the boomer generation. And if you're a boomer, sorry, but there's a lot of like people that I have spoken with over the years that they're like taking advice from their parents on investments to make in these very safe investment uh, portfolios. And while I understand that mindset, the boomer generation had a very different opportunities as this generation, right? You cannot get by with 3% annual increase in your portfolio. You can't even get by with 7%. It's just not enough. It is not enough. And, the boomer generation, they had pensions, they had, full payout pensions. And the new generation, they don't have any of that. So they literally have to save way, way more in a much tougher environment to invest, especially in the stock market, which is completely rigged. We know this is completely difficult to kind of get these major returns. This is why a lot of people are looking at Bitcoin now in crypto generally. But the issue is now Wall Street's involved in crypto and they're manipulating the market as well. And they're kind of taking control of those markets. So we're going to see less volatility over time. So it's kind of like on both ends. But I do think that the mindset in the US has to change from like, no, crypto is currency. Like you can transact with Bitcoin. And even if you don't want to transact, like it is the best asset in terms of performance over the last 20 years in the history of the world, actually. And you don't hear any of that. You'll still hear, oh, well, we'll go listen to Jim Cramer on CNBC. We'll see what he's recommending. It's like, what? Anyway, I do think that things are better in the US from a regulatory standpoint and all of this. I mean, we're even hearing Bitcoin-related convertible bond ETFs are coming to market. The convertible debt from Michael Saylor's strategy comprises the majority of this Bitcoin Treasury convertible bond ETF. And so we're seeing things like this. We're seeing the Bitcoin and Ethereum and other ETFs that are going to be probably approved in due time. But really the focus should be on the investing piece. I mean, even the president's own company is created World Liberty Finance, which is investing in cryptocurrencies. By the way, they did dump back last month. I'm maybe doing a separate video on this. They dumped Lincoln Aave. I didn't even realize that, but again, buy low, sell high. But the bottom line is like, if you are not investing in the future, right? And there's still people who are like, Apple's the future. It's like, no, Apple's not the future. Apple's one of the largest companies in the history of the world in terms of market cap and valuation, right? How much higher is it going to go? You think we're going to have a $30 trillion Apple company by the time you retire? Like that's ridiculous, right? Maybe it's not ridiculous, but I think it kind of is, right? Because these companies, they go up and down in valuation, up and down in excitement about those coins. I mean, but again, we got Bitcoin, we have Ethereum, we have everything else. Ethereum is flat as developers prepare for the Huli testnet ahead of the Pectra upgrade. Now, remember, we heard that there was the Holsky testnet and there were some issues with the Pectra upgrade for Ethereum and that the Ethereum upgrade was going to be delayed. Now they're saying that Pectra could hit the mainnet as early as April 25th. I'm kind of looking at the April-May timeframe. I originally was looking at April, but apparently Ethereum is always delayed. So maybe May. We'll see. But yeah, I mean, Ethereum definitely needs this kind of catalyst to help drive the price higher. I personally think that we're going to see, if the price starts moving and we see a doubling or tripling of price in the next 30 days, we'll probably see the upgrade occur in April. I do think that a lot of times these upgrades are kind of timed with the market. You'll hear, "Oh, we're delayed, we're delayed. Oh, we have an unexpected delay, unexpected delay." And then as soon as the markets start pumping, every ecosystem starts announcing things, announcement of announcement of announcement of announcement, right? To keep pushing the price higher and higher. And then they give the official announcement. And this is where you hear, buy the rumor, sell the news. The rumor is we have an announcement of an announcement. The news is here is the announcement. Once they make the announcement that the upgrade went through and everything was smooth, boom, price starts dropping, right? And so this is not just with Ethereum, it's with all the coins. And this brings us to Cardano. Cardano price faces critical support tests and bullish breakout, or is a drop ahead? And if you're up to this point in the video, don't forget to give the video a free thumbs up and hit that subscribe button. That way you never miss a new video. Now, Cardano's price is currently testing a crucial support level, and the reaction could determine the medium-term direction. Cardano continues to stay near its important 200-day moving average. The fall beneath this current support level might create new bearish pressure affecting the asset through the upcoming weeks. Now, remember, with Cardano over the last several years, there has been inflation, about 1 billion coins per year. So for Cardano to reach the same market cap, the same price that it did on the last all-time high, about $3.10, it has to be multiple billions of dollars higher because of those billions of coins that have been injected into the ecosystem. Now, is it possible? Yeah, I mean, in the last 4 or 5 years, 4 to 6, maybe 4 to 7 billion coins have been inflated in the circulating supply of Cardano. I don't know that that's necessarily going to affect the price to the downside in a bull market, but here's the deal, right? Especially after the Cardano announcement in the president's tweet about Cardano, XRP, and Solana being in the strategic reserve. Cardano cratered. Cardano was only able to maintain price for basically a day, maybe 2 days, and then it fell right back down. And within a week, we're at pre-announcement prices, right? So again, announcement of announcement of announcement. We want Cardano to be in the reserve, and then we hear from David Sachs that it's just because it's the top 5 crypto, but that doesn't mean that it's anything special. And he even said himself that people are reading into that comment or that tweet way too much, and that includes the holders of Cardano or the speculators of Cardano, because as we have discussed before, based on this price movement here, right before announcement, at announcement, after announcement, this basically looks like traders are selling off, and probably insiders as well. The reason I don't necessarily think it's insiders is because of the price level. A lot of insiders, they could have sold at $1, they could have sold at $2, $3, and we've revisited the $1 price a few times, recently, that they could have sold. And so if they were going to sell, they probably would have already sold. I don't think that they would have necessarily sold on an announcement of potential Cardano in the strategic reserve, because if they were holding before that, they're probably going to be holding after to just see if it does actually make it into the reserve. But either way, under $1.50, I don't think that we're going to see that much insiders selling. When I say insiders, I mean people who've been holding for the last like 3 years. They're people who are stakers, they're stake pool operators, they're building DeFi in the Cardano ecosystem or whatever. Like, they're insiders. They work within the Cardano ecosystem. I do think over $1.50 we'll start to see some insider sells. But right now, I don't necessarily know that we are seeing that. I think this is all speculators. That's not really a good thing to see speculators in your coin, at least not for these kind of pumps, because this is a small pump, right? This is not even a big pump. This just went from 60 cents to $1.10, right? A big pump would be 2, 3, 4, 5x. And if we go 2, 3, 4, 5x, they're going to be selling all the way the hell up. And so if you're waiting for that 10x, we may not even hit there because the speculators are going to keep selling into the pump. So while you're buying, saying, "Oh, we're going to hit $10, I'm going to keep buying, I'm going to keep buying, I'm going to keep buying," you're buying it from the speculators who are selling. And then when you don't have any more money left to buy at higher prices, the price drops, and then you're in the red. That's how the price moves. And so this is really critical for Cardano to actually hit these levels. Most of the levels that I'm seeing is around this 80-cent range, right? Can Cardano get above 80 cents and then hold above 80 cents? If it can, that could look bullish in the near term, but in my view, it's actually looking a little bit bearish unless there's a major catalyst in the macroeconomic situation, right? From the Federal Reserve, from an inflation rate, from a money printing standpoint, from a debt creation standpoint, one of those mechanisms. And obviously, we talk about that on this channel all the time. Now, what I recommend is following this channel. That way, you never miss. So it says Cardano's price is set to decline. The broader financial markets have seen a decline in risk appetite, negatively impacting major cryptos like Cardano. Stock values have declined. Digital assets face challenging economic conditions that generate valuation unpredictability in their market value. So basically, it says technical analysis shows that Cardano price has traded within a triangle pattern since late 2024. This price movement has developed two converging levels, including lower highs and higher lows, which suggests an upcoming breakout. The price could experience a major rally after upper trend line is surpassed. Now, this could take months. You could see we're in March right now, and it's showing potential breakout to the upside all the way in May. So that's still a month and a half, 2 months away. So yeah, this is what traders are watching: key resistance and support levels to determine Cardano's next move. Like, they don't have to buy in yet, right? They can buy in if they start seeing the price kind of creeping up and all of the charting looking and indicating like we're moving higher. They could just start buying, help move that price higher, and then sell into that rally. This is what traders do. This is what they're going to continue to do. It is risky, don't get me wrong. Like, they could make the wrong trade and just buying in and then trying to trade the market, they could, crash the price and lose their entire investment and then some. So, keep that in mind. But it is very interesting to see what is happening with Cardano in this cycle. I'm not excited really about it myself, but for my viewers and for the overall crypto ecosystem, Cardano is still a top 10 crypto. So we will talk about it on, you know, on an as needed basis. And as there's news that comes out about any of these top crypto coins, whether it's Cardano, Stellar, Litecoin, or any other ones for that matter. But let me know which coins you want to hear about in these videos down below in the comments. Make sure you guys are subscribed. Thanks for watching. I'll see you when I see you, and crypto on.